2026 could be the biggest year for IPOs in history. Now, SpaceX is reportedly targeting a record $1.5 trillion IPO this year, and OpenAI's IPO could also approach $1 trillion, and Anthropic would be another big IPO. Well, Musk says it's possible SpaceX hits a $100 trillion valuation someday. For that to happen, SpaceX probably would stay together with Starlink, and Musk also thinks SpaceX had a record year in 2025, earning around $15.5 billion. Most of that would have come from Starlink. Well, joining me to weigh in this morning as we kick off the new year is Justus Parmar, CEO of Fortuna Investments. Good morning, Justus. Happy New Year. So first and foremost, I do want to get your take on Elon Musk reportedly targeting a record IPO for SpaceX. So what can investors expect?
Well, it's going to be a fantastic year for IPOs. I think the setup is fantastic. I think the interest rates are going down. I think we had a very, very strong equity market in 2025. So the setup is fantastic. So it's going to be a great year for IPOs. I'm in constant communication with all the big banks in New York. I'm a client of theirs, so I've got the access and flow and the visibility on a lot of these deals coming down the pipe. So what I think investors can expect is get your popcorn out, get ready. This is going to be a blockbuster and banger of a year, especially in space and AI, and I actually also think commodities.
Well, speaking of popcorn, I do have my popcorn ready, but Musk saying that SpaceX's revenue could have been around $15.5 billion last year. Some estimates putting it at $20 billion. But with SpaceX likely to post record revenue, how important is Starlink to the company's growth strategy here?
Well, it's very important, and keep in mind, Remy, I'm a very early shareholder of SpaceX, so I get to look underneath the hood. I see some of the financials and things like that. We're very blessed to be in SpaceX early, but yeah, look, it's a world class, it's a generational company. I think they might even come in a little bit higher than that $15 billion of revenue. Yes, the Starlink is absolutely critical to that, but don't disregard the launch side of the business, which it's almost 50-50, right? So I mean, it's kind of 60-40, 60% Starlink, 40% launch. You got some government, some other different stuff kind of in there, but it's actually more balanced than just solely Starlink. So it's a really, really exceptional company. It's doing things that other companies can't do, and it's doing them very, very well, which is one of the reasons why I think it's the first time for retail investors and the street to really get involved in a name like that. So it's going to be the biggest IPO if they can get it out in the back half of the year. They're still trying to pick out the bank and trying to figure it out. But if they can get this thing out, it's going to be the biggest IPO in the history of the world. And unlike Saudi Aramco, which was I guess, that held the previous record in terms of financing for an IPO, this is one of one. They're not pumping oil. They're doing something very, very exquisite that's changing the trajectory of human history. And it's actually very financially viable and profitable, as you mentioned.
Yeah, and Justice, a lot of anticipation heading into this year when it comes to IPOs. But while I have you here, you mentioned commodities earlier, so I do want to get your take on this as well. So in the aftermath of the capture of Venezuela's former president, geopolitics is front and center, especially when it comes to uncertainty, but also opportunity. So when it comes to emerging markets, how is the U.S. working when it comes to resources as well as critical minerals and also protecting national security?
So in short, USA is working very, very well because of this new administration. I mean, Doug Burnham, the Interior Secretary, Chris Wright, the Energy Secretary, the first thing that President Trump did was sign an executive order, an emergency for energy. So we're starting to unleash American oil, American infrastructure, critical minerals. They've been deregulating, getting rid of permitting and all this sort of very cumbersome permitting processes that may take decades in certain cases. So we're unleashing all these great commodities. We've got all these commodities in America. We don't necessarily have to go, to Greenland or Venezuela and places like that. I think we're actually going into those areas a little bit less because of their commodities, because I think we're getting them from our own supply over the next couple of years. But I think it is more geopolitical, where if you actually take a look at the map, you've got Alaska on the left flank. You can maybe pick up Greenland on the right flank. The majority of America's imports actually come through the Gulf. So having Venezuela and Cuba and things like that, it becomes an impregnable fortress of sorts. So I think there's a lot of geopolitical stuff. I think there's the commodities that we want. And so the net is America situated in a very, very nice way coming into 2026 to capitalize on some of these emerging trends.
And just as finally, before I let you go, we have a little over 60 seconds here, but you highlighted a lot of key themes that we're paying attention to as we head into 2026. But we have been hearing a lot of announcements coming out from the White House, in particular the Trump administration. And there are questions about how all of this will shake out, in particular when it comes to asset classes. So what are your expectations? And since we've been talking about IPOs, what factors in particular are you eyeing?
Well, I mean, the fortunate thing is, I think it's going to be a really good year, broadly speaking. So I don't want to say you can't go wrong because you certainly can go wrong. The one thing I would highlight is everybody's very excited about oil these days because it's in the news, it's in the media. It sounds like, they're going to get Venezuela online to a couple million barrels a day, which I guess net is good for the American consumer and the price of goods. However, from an oil company and profitability standpoint, it might actually suppress the price of oil. So the key takeaway is if the price of oil is actually going to stay even or even go down, simply buying oil companies isn't going to do it for you. Maybe you pick up a Chevron that's going into Venezuela that's going to be profitable and that's got a unique edge. But I hear a lot of chatter, and maybe wrongly so, about just buying broadly oil companies because, again, the key commodity is oil. And if the price of oil actually goes down because of an oversupply of oil, that's not the greatest place to be. Again, an adjacent way to potentially play something like that is companies that use oil, like airlines, for example. And I'm not saying buy airlines, but airlines, 20–30% of the cost is oil. And if that becomes cheaper, guess what? The company's going to become
Justus, sorry to interrupt you, but we will have to leave it there for today. So as always, wonderful talking to you. Thank you so much for joining me. I appreciate all of your insight.